I want to bring in a guy who kind of knows his stuff here, right? Tressa's chief economist, Daniel Lacalle. I've just got some of your books up here, Life in the Financial Markets, Freedom or Equality, and some of the other ones. And I just want to talk about this Bank of Japan thing, because you put out a very compelling tweet. I still don't think the audience understands, because it's somewhat complicated, and it's also sort of weird that Bank of Japan would have so much influence on our economy and our stock market. So let's talk about this, because you've outlined how we got here. In the beginning, the Bank of Japan just started printing insane amounts of money.
Absolutely. It starts printing a lot of money, Charles. Then it becomes the largest holder of equities in Japan, creating a massive bubble that investors feel is going to be a safe bet. Therefore, a lot of investors are going to start taking bets that are financed with cheap yen in very low rate Japan, and ultimately they're building risk, and risk builds slowly but happens very fast.
Right.
And what happened was that after printing so much money, the Bank of Japan found itself with a yen that was at the lowest level in 40 years. Therefore, it decided to intervene in the market. It put more than $30 billion to sort of stabilize the yen, and by doing that, it destroyed its own carry trade. So the Central Bank of Japan created its own bubble and burst it, and led the entire market with it.
So I put up the chart here, right? This is the Bank of Japan, their holdings, folks, and this is their percentage of ETFs which own stock, right? I mean, our central bank doesn't own stock, and to Dan's point, it's sort of been coming down here lately, and of course the unraveling of that has hurt their markets. It's hurt our markets. Of course, they panicked against the panic, and overnight said, okay, we're going to be cool. So then we start talking about this. The yen falls to 40-year lows. The Bank of Japan, ironically, blames speculators, but aren't they seducing speculators? Aren't they making it easy to borrow the yen at nothing and buy the NVIDIA, buy U.S. Treasuries? Aren't they stoking all of this speculation? And what does it mean for our own Federal Reserve, which seems to be in a similar position with regard to the next move?
It means a lot. Who is the biggest speculator? The Bank of Japan, who is taking the biggest risk levered with the money that they print in their own economy on the stock market, leading valuations higher, and at the same time creating the incentive for investors to take a lot more risk. Now, what is the problem for the Federal Reserve here? The problem for the Federal Reserve is that this enormous carry trade generated in the other side of the spectrum is affecting very, very significantly its holdings of treasuries and its holdings of mortgage-backed securities. If the Japanese start selling mortgage-backed securities, then there's going to be trouble.
Yeah. And by the way, I love how you ended this. You think this is free markets. I just don't know if the free market ship has sailed anyway on both sides of the Pacific. Daniel, I wish we had more time. I love the way you explained it. I hope we made some inroads with the audience, because again, it's sort of complicated, but it is obviously a huge issue. Thanks a lot, friend.
Thank you very much, Charles.
All righty.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.